Hey, this is Phil Denfeld, and it's your Friday video update. So good news. Fannie Mae this week announced that starting with their new release of the desktop underwriter, their automated underwriting system that comes out December 12th, lenders will be able to offer 95% financing up to $625,500 in our area, in the high cost areas. Now previously this was capped at 90%, so this is just one more thing to give borrowers another lower down payment option up to $625,500. So that's really good news. Second, they have lowered some of their overlays or changed some of the guidelines on a few other things. One in particular has to do with the borrower previously had to have 5% of their own funds when they were putting less than 20% down. That's been removed now for both Fannie Mae and Freddie Mac. That's great news as well. And we're seeing some other guidelines loosen up. So, the mortgage industry is finding its footing, and we're doing better loans these days with all the guidance and regulation, and Fannie Mae and Freddie Mac are recognizing that. And last, I want to talk to you quickly about some changes that came about with regard to TRID and having to do with approval letters or pre-approval letters or pre-qualification letters. There's always been some stigma about what do each of those terms mean, what should you use. Well, because now you can't actually issue an approval letter until you've received a full application, and oftentimes we don't have that when we're initially talking to the borrower. And now we always went ahead and issued the approval letter because we'd gotten all and required all the documentation from the borrower, so we could make sure that we'd done a full analysis of that information. But because TRID does not allow us to require the borrower to give us that documentation ahead of time until they've made full loan application and given us an intent to proceed, we're now going to, at First Heritage Mortgage, use what's called a conditional approval letter. And what that's going to tell you, the real estate agent, is that we've done a thorough analysis of all of the information that's been provided to us, and based on that analysis, we conditionally approve that loan. Now, what can you do as a real estate agent to help us out in this process? I would suggest that you tell your borrowers or your clients ahead of time, listen, go to your lender and provide them all of the information that you can provide them ahead of time. Give them your pay stubs for a month. Give them your tax returns for the last 2 years. Give them 2 months full bank statements from all of your different asset accounts. Give them as much information as you can so that they're certain that you're able to get the house once you're under contract. Unless they want to make full loan application and do everything, that would be the next best way for them to ensure that the letter that they're getting from the lender has some teeth in it. And if you as a real estate agent get a letter that you're unsure of, call the loan officer and ask them, what information have you seen? How comfortable are you with the letter that you've written? So I hope that helps you. Please feel free to pass this along to anybody you might think might find it useful. I thank you again for listening as always, and have a great weekend. I'm happy to help. If you have anybody who needs to talk to a good lender, give me a call. Take care now.